and venture capitalists. So I would like to introduce our distinguished panelists, Nicole Elam, who is the president of the National Bankers Association, Bill Braxton, who is the managing director of global client business at Goldman Sachs, Sean Wooden, who is the partner and chief public pension strategist at Apollo Global Management and is also the former Connecticut state treasurer, and our moderator, Ms. Sade Baderinwa, who is an Emmy Award-winning news anchor at ABC News and founder of Get Real with Your Dreams, the Inside Track, that has granted nearly $500,000 in scholarship money to connect high school students to top professionals in the media industry. We're looking forward to this conversation.
Okay, great. Thank you all so much. Well, I think we're going to dive right into this topic. You know, we're talking about the banking crisis and its impact on Black investors, venture capitalists, entrepreneurs, and, you know, what does this future look like now with the failed banking system? So, you know, I actually want to start with you, Nicole. Let's talk about you and what is the difference between the mid-sized bank and the larger banks, those regional banks, first of all?
Yeah, that's a great question. So when Silicon Valley Bank failed and Signature Bank failed, most people really didn't understand what it was. Those banks are truly unlike most banks in the US, and they're certainly unlike most community banks that I represent. And they're different in two big ways. The first is their customer base. These aren't the types of banks that you and I can just walk into and open up a checking account or go get a mortgage. No, these were the banks of crypto and digital assets and tech startups, which are really industries that in a number of ways are considered riskier, right? They're riskier because tech startups, they don't have a proven track record of success. As a bank, I can't look at your revenue stream and say, yes, you do have an ability to repay. And so even though these are industries that deserve, obviously, to be banked, they had a high concentration in those industries that are considered volatile. Another big way that they're different is because of their depositor base. Most banks, 90% of their depositors are fully FDIC insured, which means that if the bank fails, I'm confident that the FDIC is going to make me whole again. They were the exact opposite, where 90% of their deposits were uninsured, so that when those banks failed, you had so many businesses that were looking around wondering if they could make payroll. Now, why does it matter that they had a very untraditional banking model? The reason why it matters is because when it failed, it called into question the entire banking system, and it really impacted community banks the most. It started to get people wondering, oh my goodness, this bank that's down the street that has constantly served me, should I bank with them continually, or should I take my money and go to a bank that the federal government has taught me is too big to fail? And so it really impacted the perception of community banks and whether they were safe, and it doubled down on this idea that we live in a two-tier banking system of banks that are too big to fail and everybody else, because most people don't understand the unique features of Silicon Valley Bank and Signature Bank.
So what impact did their failures have on minority deposit institutions?
The biggest impact that it had was deposit flight. Right, I talked about this idea is that it caused people to question whether they could continue to bank at this local community bank that has really been the ones that's been serving them for over a century. Community banks, particularly Black-owned and operated banks, have been the ones that have said yes to communities of color when other banks said no. And the big reason why they've been able to do that is because they're not overly reliant on algorithms that we know are full of racial bias. And so the big way that it impacted them is that we saw deposit flight, particularly in the weeks following the bank failures, as people were withdrawing their money and they were taking it to banks that they saw were too big to fail or that they thought were too big to fail. So that's the biggest way that it was impacting this deposit flight that we saw. It's since stabilized, but small banks today still have $305 billion less in deposits today than they did in early March before these bank failures. So it really led to deposit flight, and it led to people questioning, should they bank with a community bank, or should they take their funds to banks that are too big to fail?
And these are really scary times for entrepreneurs. They are looking for that capital. So when you've got some businesses that are already living on the margins, you know, they're trying to make payroll, what happens now?
Now it's even tougher. I think the biggest thing that's coming out of this is that not only with the Fed increasing interest rates are you seeing the cost of capital going up, now you're seeing less capital available. And we all know that entrepreneurs and Black business owners already have less access to capital And if there's less capital available, we're going to be struggling even more. And so that's one of the things that's really coming out of it, and it's in an early stage, but it's going to get worse.
You know, I saw one quote by Kelly Burton, who is the CEO of Black Innovation Alliance, and she says, when our economy catches a cold, the Black community catches the flu.
Catches COVID. It's even worse. Yeah.
Yeah.
Yeah, no, and I argue that the so-called banking crisis, like for the Black community, it was already a crisis. And the crisis existed before SVB went under. And when you look at, Bill just talked about the challenges with the access to capital. We all know about that, historic, systemic, pervasive, and even when Silicon Valley Bank was flying high, broadly speaking, in the traditional banking sector, those challenges still existed. And so with that going under, it's undermined the system and perhaps created more of a regional banking crisis in the traditional sense. And it's exacerbating the existing inequities. When people get nervous, as a state treasurer, we look at the markets, and when there was volatility in the marketplace, you see a flight to safety. And so you're seeing that in two ways. One, Nicole just talked about it with, and let me clarify, a flight to safety, or you see, and a flight to perceive safety.
Perceived, yeah.
Because there is a difference. But in the case of Nicole, a flight away from a number of the community banks because maybe the too big to fail banks are safer, but it's perception. When you see it in terms of access to capital, in which our community has already been challenged, you see, okay, these other institutions, majority institutions, entrepreneurs, they look safer, right? When that is not borne out statistically by the numbers. I would always shock my colleagues across the country, and I was the president of the National Association of State Treasurers, when I would tell them, and we talk about diversity, and I would tell them that out of my top 10 private equity VC funds in my portfolio, 4 of them are diverse managers. Really, right? And that's based purely on performance. And so I think we have to look broadly at these challenges and not be so focused on Silicon Valley Bank and what happened, and look up broader at the existing systemic challenges in the traditional banking system that predated it, and the fact that they've got a cold and now we've got the flu and worse.
Right. I also want to bring up, these small businesses, and I really want to talk about the importance of SVB because it is the nation's 16th largest bank. It's a 40-year institution based in California. They had nearly $175 billion in customer deposits. This is the second largest bank failure in U.S. history. We could not look at this lightly. And besides that, also, SVB was crucial when it came to minority businesses. They were the ones that were there. They were the ones that were establishing businesses. They were the ones who were helping to build contacts. So what does this mean? Because that is a huge presence now gone.
So it's there still. The system actually stepped in and preserved the bank, and so SVB was significant.
But I'm really speaking about more of the relationships and really helping to
Right.
build that ecosystem for other minority businesses.
And that's what I was just about to say. It was significant because it was unique in the landscape for the Black VC entrepreneur ecosystem. So it was unique in a landscape where a lot of barriers, they were a friendly oasis to engage with, right, and did a lot of business. So in that way, it's a big impact. But I caution from the crisis. It's a crisis and an impact on our community. In a banking system, to me, there was a management failure there rather than a systemic banking system failure. And that created confidence issues. And 15 years ago, it would have taken weeks to bring that under. With most people banking online and on their phones, it took hours for the flight of capital and the confidence to have that impact. In the entrepreneur community, people could not prepare for it in a traditional way.
And to be
42
clear,
billion.
it was more of a risk management failure than
Yeah.
a traditional management failure,
Yes.
the way they manage their assets.
But it goes to this idea of perception versus fact, right? It's perception that is really having the biggest impact on what's going on. Because, you know, as Sean mentioned, they're continuing to be served. And I would say over the last 3 years, you've seen a growth in various funds that serve that community. Never before have you seen so many new funds that have been created to help tech startups, because it is very hard for startups to get capital because, again, they don't have a proven track record of success. So you're taking a risk on them. So not only do you have banks that have been created to serve them that are still here, but you also have so many more funds that have been created to serve them. But the perception problem that goes against facts is the biggest issue.
And Sean, you mentioned earlier, we were having a conversation about this, that this whole issue of this bank failure is more than banking, that this actually impacts many other sectors of the economy. Can you explain that?
Yeah, I think this is a microcosm of what happens generally in our economy when there is stress on the system as it relates to the black community, right? So every facet, the consumer, right? Inflation going up, access to capital, credit card, it impacts those on the margins, right? Those with the lowest cash reserves, right? Typically young, typically black and brown, you know, a few categories. And so you're gonna see this ripple effect throughout our economy with businesses, but the going to be born in every sector by the young, the black and brown, and you name the career or what hat you put on it, but it will be a broad impact, and I think that's what we're going to see, and we're just at the beginning of it, because you know, the consensus, you know, of economists is that we're going to see negative GDP growth. Right, we have defaults on loans going up, so we're in a beginning of a default cycle. We have real estate market, commercial real estate market under tremendous stress, and we have not seen the impact of that yet through the system. And so the fear factor is going to go up tremendously, and it's creeping up now. And so I think we're really at the beginning of this cycle where we need to be faster than we have been in the past, and that's why these conversations are so important, as to get to what do we need to do to protect our community with what we know that's coming down the pipe.
And Bill, maybe you can add to the conversation, because now what's happening, since you're at Goldman Sachs, the Apollos and the Goldman Sachs of the world are picking up the market share because banks have had to retreat. Is that what you're already beginning to see?
Well, we've seen a proliferation of external capital sources outside of the banks, really for the last 5 to 10 years. You've seen private credit lenders like Apollo, like Goldman pick up the slack in certain areas. And the truth is, the areas that we generally operate in are the larger mega companies. And so when we're talking about startups and we're talking about VCs, it creates an opportunity for external lenders outside of banks to jump in. But the truth is, a lot of these larger institutions like ourselves are focusing on some of the larger companies that can no longer go to the banks that are too big to fail. We do have strategies and funds from smaller lenders. Like, we have a strategy that we're in the process of launching right now that'll pick up some of that slack, but that's a small portion compared to the size of the banking industry.
But I want to say we have a better strategy. No, I'm only joking. But this is an important point, because we're focused on the banking sector. But just to put this in context, right? They asked Billy the Kid, why do you rob banks? He said, because that's where the money is. Mm-hmm. And so to put this in context, credit. In Japan, 90% of credit is delivered to the marketplace through traditional banking. In Europe, it's 70% of credit. In the US, it's only 20% of credit. And so we really do need to look at the broader capital markets and the black private equity VC ecosystem, and how to better access that 80% market share in the US in order to really drive growth in our community.
I want to pivot for a moment, because front and center today is the Supreme Court's decision about affirmative action. Clearly, this is going to have a ripple effect across not just education, but in finance, in banking. Can you talk about the effects that you think that we'll likely see?
I am glad you asked that question. I've been struggling all morning. How do we have this conversation without talking about that decision? This is just the beginning. This decision is just the beginning that's going to ripple through to corporate America and all of these things that we're talking about. And in the aftermath of George Floyd, there are lots of awareness, lots of capital commitments being made in terms of to be deployed to black-owned businesses, vendors, investors, and so forth. And I even led an effort, of like 18 of the leading financial services institutions, including Goldman Sachs, to focus on that. I believe, so one, we know a lot of those commitments, and I'm not speaking about what I was involved in, but broadly speaking, have not been delivered on yet. Two, I believe that what's happened with the Supreme Court today is going to accelerate a pullback on some of that will be legitimate fears about using race, saying race, talking about race. Some of it will be just another excuse to have the status quo prevail.
And you kind of touched on that. It's going to come across multiple industries, but if you look at the industry that we're in, asset management, we already have a small number of black and brown asset managers. I think the total number of assets that are managed by black and brown professionals is less than 1% of the entire marketplace. So if the Supreme Court says that affirmative action is no longer a cause, it's actually going to impact the hiring practices of asset managers. It's going to impact the hiring practices of tech companies. It's going to impact the hiring practice, the admissions of certain schools. I have a daughter that's applying to college as we speak. So this is dear and true to me. The industry that I'm in, it's dear and true to me. I want to expand our numbers, not retract our numbers. And this decision is going to have a very negative impact across the board. Asset management, tech companies, consumer, everything across the board.
Nicole?
I think the only thing that I would add is that it's really a call to action to make systemic changes, right? We know that the data doesn't suggest that we live in a race-neutral environment. We know that black entrepreneurs are 2 times more likely to be denied for a small business loan, even if they have the same credit profile as their white counterparts. We know they're 2 to 3 times more likely to be unbanked and underbanked. We know that they have a higher risk of climate across flood, fire, wind, chemical pollutants. So the data doesn't lie. So the data doesn't suggest that we live in this race-neutral environment. But I think it's a call to action for us to be more systemic in our thinking. This is not a check-writing exercise for philanthropy, but this is an opportunity for them to think about how can we do underwriting differently, systemically, looking at our policies and procedures internally. If we're at a big bank, how are we doing our lending practices? Are there barriers in place that makes it difficult for people to get mortgages and small business loans? All of these types of things, I think we need to be internal and look systemically at what policies and procedures that we can change, and obviously public policy things that we can do as well. But this is a moment of systemic change, and those are the things that we need to be fighting for, not the fringes.
Absolutely. Was there anything else you wanted to add?
I say the only saving grace, right, going back to my service as treasurer, is that every investment decision I made, it had to be with being a fiduciary front and center. And some people got confused about like how forward I was about diversity, equity, and inclusion, but that was based on data. And so the only saving grace is that there are numbers. We have a number of successful entrepreneurs out there. We have a number of successful investors and VC fund managers. And to use that data to hopefully break through the wall of bias, because the bias has been so strong that people actually think they're protecting assets by not investing or doing business with black and brown communities, when I argue you're not meeting your fiduciary duties if your lens is so narrow that you're ignoring performance and opportunity, right? So
you're leaving GDP on the table.
Go ahead, Nicole.
Yeah, you're leaving GDP on the table, right? When we know that when you have diversity in the boardrooms, that those companies perform better. We know that if you were to add more entrepreneurs of color to the table, then GDP grows. If you were to address income and wealth disparities, GDP grows. So you're leaving money on the table when you don't focus on diversity.
I am getting a wrap, so it looks like we have run out of time. Thank you
I
all.
still want to talk.
Bill Braxton, Sean Wood, and Nicole Elam, thank you so much. Thank you.